Central Georgia has its own pace. It doesn't swing as fast as larger cities, and it certainly doesn't react the same way to national headlines. February 2026 really didn't bring a big shift in the housing market. It brought something far more useful than that. It brought consistency. And when a market starts to behave consistently, it becomes a lot easier to understand and so much easier to make decisions in. So let's walk through what actually happened in February and what it means for you if you're thinking of buying or selling right now. Right now, Central Georgia is sitting at about 5.2 months of supply. That puts us far closer than what we would consider a balanced housing market. There are more homes available, and that gives buyers a little more time to consider their options. Balance really doesn't mean slow, though. Homes are still selling. It just means decisions are being made with far more intention than they were a few months ago. The average sales price in February was $382,922. That's an increase from January, but it doesn't mean that every home went up in value. It just reflects what sold. When more higher-priced homes close in any given month, the average price moves along with it. So this is less about a sudden increase in value and more about a shift in the types of homes that sold. Sellers received an average of 95.2% of their list price. That tells us buyers are active and they're paying attention. They're not stretching just to secure a home, and they're also not ignoring pricing either. Homes that are positioned well are still selling, but overpricing is being noticed. That's a healthier dynamic for both sides. Homes are taking 62 days to sell. That's a steady pace. Some homes are moving quickly and others are taking a bit longer. That difference usually comes down to three things: price, condition, and how the home is presented to the market. This isn't about urgency, it's about alignment. As of mid-March, 30-year fixed rates were sitting at a low 6% range, around 6.1 to 6.3, with 15-year loans in the 5% range. What changed is how buyers are reacting to these rates. There's less reaction and more calculation. Buyers are looking closely at monthly payments, long-term affordability, and how the purchase fits into their overall plan. That is shaping the pace of the market. Here's what the numbers don't fully capture. There's been a huge conversation around housing supply, including the 21st Century Road to Housing Act. The goal for that is to make it easier to build more homes. But that kind of change doesn't happen quickly. It doesn't immediately increase the number of homes available in the areas and the price ranges that most buyers are focused on. So while the market looks more balanced overall, access to the right home at the right price is still limited. That's why some buyers feel like there are more options, but fewer that actually work for them. This is also why the market feels a bit different than it did a few years ago. It's no longer driven by speed, it's driven by decisions, and that's where strategy matters most. Let's break it down county by county, because while Central Georgia gives us the overall picture of the area, your local market is really what determines your experience. Each of these areas is moving at its own pace, but they're all showing the same underlying shift: more balance, more selectivity, and more thoughtful decision making. In Butts County, there were 25 homes sold in February, with an average price of about $302,000. This is a smaller market, and it responds quickly to pricing. Homes that are priced correctly are moving. Homes that miss the mark on pricing are sitting longer. That pattern is consistent and expected in this type of market. Lamar County saw 15 homes sold with an average price around $276,000. This market continues to be steady. There's no sharp movement in either direction, just consistent activity and realistic expectations for both buyers and sellers. Henry County had 224 homes sold with an average price around $366,000. This is the most active market in the region that I serve, but even here the pace has shifted. Buyers are taking their time and sellers are adjusting to that. Homes are selling, but they're selling based on value, not urgency. Monroe County had 15 homes sold with an average price around $405,000. This continues to be a market driven by lifestyle decisions. Buyers here are often looking for space, land, and long-term living. The pace may be slower, but the intent behind the purchase is strong. Jasper County had 17 homes sold with a price around $549,000 on average. That number needs a closer look, though. Higher priced homes sold this month, and that includes a sale of up to $1.75 million. That significantly influenced both the average and the median prices. In a market with only 17 transactions, it doesn't take much for higher end sales to shift the average. This isn't a sudden increase in value across the board, it's just a change in what sold. Spalding County had 59 homes sold with an average price around $324,000. This remains the most easily accessible market in the region, and that accessibility continues to bring buyers into the market, even if the overall pace becomes more measured. Here's the takeaway from February. The market isn't trying to catch up, and it's not falling behind. It's falling into a rhythm that's easier to understand. Buyers are thinking more, and sellers are adjusting more. The numbers are starting to reflect that. It's not a dramatic shift, but it is meaningful. If you are trying to figure out what this means for your specific situation, that's where the conversation matters. I'll keep breaking this down for you month by month and county by county so that you can make decisions that actually make sense for you.